Another light week for leading economic data, with the focus instead on this weekend's US Central Bankers Economic Symposium in Jackson Hole, where US Federal Reserve Chair Janet Yellen will talk on the topic of resilient monetary policy frameworks for the future. Whether or not we will get a more clear insight into the timing of the next US rate rise will be the primary focus, so currency and bond markets will be on edge ahead of any announcements, which won't start hitting the press until after midnight Friday our time. Looking at exchange rates here, the Aussie and the Kiwi dollar have both recovered quite strongly this year, despite both countries facing fairly similar challenges, such as being at the mercy of offshore demand, especially from China, and queries over property markets, both sides of the Tasman. And we both failed to weaken our respective currencies by virtue of the August rate cuts. Also in common is low inflation, being driven increasingly by low wages growth, which has Australian inflation, the blue line, well below our 2% lower end of the target band, and New Zealand below their 1% target floor. There are other factors keeping inflation low, but the lack of wages growth does seem a well-entrenched trend. And finally, consumer confidence, without being far above its longer-term average, has been boosted by the recent rate cuts, shown here as the dotted lines. So, even if that didn't help the Reserve Bank with a lower Aussie dollar, there have been some positives arising from the cut. Just not much ammunition left in their arsenal now. But at 1.5%, we're still much higher than the US at 0.5%, the UK at 0.25%, and most of Europe in negative interest rate territory. And that's the market update from Bendigo Bank.